When was the last time you ordered on Amazon?
Every day I do it.
When was the last time you used an Apple product?
Oh, I'm using it right now.
When was the last time you signed into Google?
This morning, perhaps.
So where are those companies going? Is that risky?
How do you differentiate between all of these stocks versus mutual funds versus commodities and perhaps crypto as well?
Average drawdown in Bitcoin is 70%. The average drawdown in the S&P 500 is 25%.
What is the biggest mindset shift that I personally need to move ahead with this kind of investment vehicle?
Yeah, that you need to understand all these different asset classes and you should diversify your portfolio. So I think one of the mind shifts first is that it's a super liquid market.
When you say 80% is emotions, do you want to explain the emotional part here?
So you could be in a situation where you take a trade, you get stopped out, and you take the same trade again. It's very interesting how you learn to control your emotions and you learn to be a little more emotionless, to be honest.
What is the safest way to start investing in financial markets for me?
In my opinion, the easiest way is to...
Thank you so much, Alexander, for being with me today.
It's my pleasure. Thank you for having me.
Thank you so much. So we just talked about Dubai property just before the recording, and both of us agree that Dubai is known for property in so many ways, and anyone who comes to Dubai, they tend to look at property as an asset class to invest.
Of course.
You know, a lot of people, including myself, they haven't paid attention to stocks, for example, as an avenue for investments.
For
right?
sure, definitely.
So what I want to do is I want to personally learn today how I can start looking at stocks as an investment opportunity and how should I go about it?
Definitely. I mean, it's my pleasure to be on here. I've been investing for the past 10 years. So I know quite a bit about the stock market. I won't say that I'm the biggest expert in it, but I knew a few things or two. And I know about investing, I know about trading, and the company which I just launched in April this year is basically been 10 years in the making, and it's something that I'm very passionate about. And I really feel that I've found the business that I want to build for the next 10 years of my life.
Do you want to explain your company a little bit before we continue?
Sure. So the company which I founded in April, I'm a co-founder. My business partner is a Swiss asset manager. And essentially what we do is we onboard clients to brokerages. Those are places where you can place trades or make investments. And we teach them how to trade and we give them financial advice, essentially.
Right. And people approach you for this financial advice. You're not brokers, right?
We're not
Directly.
brokers.
Okay.
Exactly. We introduce clients to brokers.
Right.
And then we advise them how to trade. Now that's mainly trading, which is similar to investing, but not exactly the same. So investing is predominantly looking at an asset, buying it, holding it for an extended period of time, and hoping to profit from it. Whereas trading is more taking advantage of mispriced assets in a market, and you have day trading where you hold on to a trade for maybe 5 minutes, and you have swing trading, which could be a trade that's held for 1 day, 1 week, or 1 month. It's slightly different. Predominantly in trading, so you have day trading and swing trading, you have leverage. So in normal investing, you don't really have leverage. You're essentially buying a ball, let's say. And if it's $100, then if you have 100, you can buy 1 ball. Let's say you have 1 to 100 leverage. And let's say that this asset is $100. Normally here, you would need $100 to buy this, correct? Whereas here, I could take a position either long or short, meaning that I speculate the price will go up or the price will go down. With $1, I could buy this. Because the $99 is the leverage part, which is given to me by the brokerage platform. So you'll notice that there's a lot of brokers coming into the Middle East now, predominantly in Dubai, because there's such a huge demand for people to understand financial markets and for them to start trading. So we want to be kind of like that honest platform where we can introduce you to a regulated broker, because there's a lot of brokers which are not necessarily regulated in the UAE, and also be there to hold your hand and show you how to trade. Because a lot of people don't understand leverage. They over leverage. They don't understand margin calls, which means, let's say I bought with leverage. I need a certain amount of money in my account to hold the position. And if it goes against me, I have something called a margin call, where I either need to add more money to hold the position, or my position gets closed out.
Right. You've introduced so many complicated terms for me already. I will be coming back to each of these terms now.
Sure.
During the course of our conversation. Of course, they're very, very important terms. The only request is that if you can simplify these terms
Sure.
when we reach that stage. So to start thinking about investment in stocks, what is the first thing that I need to think of, and what is the biggest mindset shift that I personally need in order to successfully move ahead with this kind of investment vehicle?
I think one of the first things you have to do is not spend before you invest, but invest before you spend. So when you get your salary, think about where you can invest your salary, and then the balance, use that to spend. I think that would be the first mind shift. Now, if you were talking only about property, every month it's kind of difficult to be like, okay, I'm going to buy a property, or I'm going to use that money to invest into property, because properties are usually bigger purchases. A lot of the time you need a bank loan, unless you're going with someone like Get Stake, which I'm sure you're aware of, where you can buy fractional pieces of property.
Yeah.
Which is also a great investment as well, and a great way to diversify.
Which is something new in Dubai as well. A lot of people
Completely
are looking
new.
forward to that. Yes, absolutely.
Yes. But when it comes to stocks, the market is super liquid. Like, you can go and buy a stock today without there having to be this whole process. Like, if you have a brokerage account, I can whip out my phone now and I can buy an Apple stock when the market opens. So it's much easier and much more accessible to make an investment into stocks than it is into property, for example, or investing in a company. Like a company, i.e. a private company, not a publicly listed company. So I think one of the mind shifts first is that it's a super liquid market. So you can buy and sell when the market is open very, very easily. And you need to take your first step in just doing it. Because a lot of people, when something is new, they're a bit worried or scared, or they don't know where to start. But the only way to really start is to just do it. So I would say, have a plan, allocate an amount of money that you want to invest on a monthly basis. And then I would start off with ETFs, which are exchange traded funds. And they basically track like the S&P 500, for example. So there's a Vanguard ETF called VOO. That's the ticker. So a lot of stocks and ETFs have a 3-letter ticker. That's how you search them up on like Yahoo Finance or on Google.
Right.
And the easiest thing you can do is just to invest in the top 500 companies in America, which is the S&P 500.
Right. So in terms of the mindset shift, of course, I mean, I need to understand, I'm still stuck with the concept of property being tangible, right? When I buy property, and nowadays I can buy fractional ownership as well, there is something tangible, it's physically available, and it's not going to vanish. The biggest hurdle in my mind is that, if I buy a stock, it can just evaporate. Something happens globally, a lot of people lose money, and, this is where I personally get stuck. So how can I change that mindset?
So you have to think of a stock as a piece of a company. Like in Get Stake, you're buying a piece of a house. You're buying a piece of a company. Now, that company obviously could be riskier than property, but not necessarily. Like, is Amazon riskier than investing in a property off plan in Dubai? I mean, that's a weighing that you need to do. You need to do your own research. But if you're investing in Meta, you're investing in Amazon, you're investing in these massive companies, I think they're pretty safe bets. Like, when was the last time you ordered on Amazon?
Every day I do it. Yeah.
When was the last time you used an Apple product?
Oh, I'm using it right now.
When was the last time you signed into Google?
This morning, perhaps. Yeah.
So where are those companies going? Is that risky? Do you think Google is going to go out of business? Because technically the only way you would, have your money taken away from you would be that Google goes bankrupt. I mean, what are the chances that Google goes bankrupt?
Well, you never know.
You never know, but also you never know what will happen with property as well.
Right.
You never know what can happen. There's geopolitical risks. There's COVID, for example. Who could have foreseen COVID would happen? So in my opinion, you don't necessarily go all in property or all in stocks, but you should have a diversified approach where you have some stocks, you have some property, maybe you invest venture capital, maybe you invest directly in companies. Having a diversified portfolio and a diversified outlook on how to build your wealth, that's the safest way to build wealth.
Right. So in terms of the returns, typically when I look at the property, I buy, for example, an apartment, I look for two types of returns. One is the ongoing rental income, which is passive income. And then if I want to sell it at a later stage, then I'd look for the capital gains, right?
Yes.
In the stocks, my understanding is that you'd look for dividends if you're
Which would
holding
be
a
your
longer term
rent.
position, right? If you're investing for a longer term, or capital gains, which could be in the day trading that you gave the example of. Is that how you'd draw the parallels in both types of
So
investments?
dividends would be similar to rent.
Yeah.
And then obviously capital appreciation is the price of that stock going up in value over time.
Right. So when it comes to properties, for example, I'd look at apartments. I have villas. I have, perhaps commercial real estate, right? So there could be three categories of properties available for you to invest, right? In stocks, what are the options in terms of the categories, right? I mean, I would say shares in companies like S&P 500 you had mentioned earlier.
Yeah, so if you bought an ETF like VOO, then you're investing in the 500 companies, top 500 companies in the US stock market. So you're actually buying a piece of 500 companies.
Right.
Because the company that manages that exchange traded fund rebalances the portfolio. But what's interesting about that is you're always tracking the top 500 companies. So on a yearly basis, if a company doesn't perform, it leaves the S&P 500 and a new company which is really performing goes in. So you're almost guaranteeing to have the best location, the top 500 location in the US for your property when you're buying VOO. You could look at it like that. Now the other ETF, which I would suggest, is called QQQ, which is the NASDAQ, which is predominantly a tech-focused ETF. And we all know how the tech companies in the US have performed over the past 10, 15 years. They've done extremely well. So in there, they have a basket of tech stocks, which you can buy a piece of every single one of those as well.
Right. So that is another category. So we have S&P 500, and then we have ETFs. And then
you'd have ETF,
okay,
which is an exchange traded fund. And you can have one which tracks the S&P 500, and you can have one which tracks the NASDAQ.
Okay, right.
You could even have a ETF which tracks a certain type of businesses in the stock market as well. But it's allowing you to have exposure to a number of different companies, but just buying one asset. But you just need to buy VOO, and that gives you exposure to 500 different companies.
Right. Now, in terms of the other assets, are there any other assets? I mean, I'll look at the commodities as well as one of and futures, for example, mutual funds. How do you differentiate between all of these? Stocks versus mutual funds versus commodities, and perhaps crypto as well.
Of course. So I believe in crypto.
Right.
I believe in Bitcoin.
Right.
I'm a bit of a Bitcoin maxi. And the reason for that is because it's the only thing which is actually finite. There's only 21 million Bitcoin.
Right.
Gold is finite, but not really, because we keep finding gold reserves, right?
Correct.
However, gold this year has done extremely well, and silver has done even better. So looking at commodities, those commodities like gold and silver have done phenomenally well. Oil has not performed as well. So again, you come back to this idea that you need to understand all these different asset classes, and you should diversify your portfolio depending on how you think the macro situation is going to take place, or also the amount of risk. Like crypto is extremely risky. I think the average drawdown in Bitcoin is 70%. The average drawdown in the S&P 500 is 25. But the average return on Bitcoin is 150, and the average return on the S&P 500 is around 10 to 15. So you really need to decide how much risk you can stomach as an investor. It also depends how old you are. If you're very young, then I suggest you take more risk, because you can fall down and get back up again. It's like taking a job in a city you can't afford to live in the city and living on your friend's couch. You can do that at 18 to 25. Becomes a bit difficult at 35 to 40.
True. So we have stocks.
Yes, you have stocks.
We've talked about crypto, right? We have talked about commodities, right? Which is gold. Could be other commodities like different metals, for example.
Of course, precious metals.
Right.
Cocoa is also a commodity. Wheat is a commodity. Sugar is a commodity. So you can actually trade all those asset classes.
Right.
You can speculate on them.
Right.
It doesn't necessarily mean that you need to have sugar in your house.
Correct. And what is futures?
futures is kind of a derivative. It's where you're making a speculation on whether an asset price is going to go up or down, similar to options, and then similar to CFDs, which is what everyone here futures are predominantly in the US, and in Europe and the UAE, we trade something called CFDs, which is contract for difference. So when you see these applications, which are trading applications, they're offering CFDs, which have the leverage.
Right.
So when you buy a CFD, so if you were to take a long position in Apple stock, you don't actually own the Apple stock. You own a synthetic version of it.
What is that?
Synthetic in the sense that because I have leverage, as I explained earlier, let's say you have one Apple iPhone, it's $100. If you have $100, you can buy one iPhone, right? But if you have leverage, you could buy multiple iPhones with the $100, depending on 1 to 10, 1 to 100. But you have to keep a certain amount of money as margin in your account to hold the position.
Right.
But you don't need all the money otherwise.
Right.
So with 100,000 dirhams, I can take a 1,000,000 dirham position in a stock or in the market because I have that leverage.
That must be very, very risky, I guess.
It's extremely risky.
Right.
And if you don't know how to control your leverage, then you can easily blow your account, which means you go into margin call and then they close the position. And a lot of people are not aware on how risky it is. Right. And that's why we started our business to try and educate people on how to use leverage. Because obviously, when you buy a property and you take a loan, it's leverage.
Of course.
You're putting 20%, but you're buying an asset. And if that asset appreciates, you don't benefit on the 20%. You benefit on the 100%.
Entire amount, yes, correct.
It's the same game. But now you're betting on stocks.
Right.
Or you're betting on commodities.
Right. Is everyone entitled to, or I mean, if you open a brokerage account and you start trading, can you straight away take the leverage, or you have to prove your credentials? Like for buying property, you need to have some sort of running income, right? To be able to show the bank that, you can actually sustain that mortgage.
Definitely. So when you open a brokerage account, number one, you need to give all your information. You need to give your proof of funds. You need to do KYC. You need to do everything to prove that you are of a certain level to be an investor on that platform. And then you can choose your leverage from there.
Right, right. Now, going back to the very basics, I am someone who is looking to start now, right? So we've talked about stocks, commodities, futures. We've talked about crypto, right? What is the safest way to start investing in financial markets for me?
I can't say something is safe because nothing is safe. You could say what's the lowest risk. In my opinion, the easiest way, I can't say risk, low risk and that, but the easiest way to get involved is to open a brokerage account and buy the S&P 500, which I would buy VOO, which is by Vanguard, and invest in the NASDAQ QQQ. And what I would do is at the end of every month, I would put a bit of money into both of those ETFs, regardless of the price. And that's called dollar cost averaging.
Right.
And that's the easiest thing you can do. Because the most complicated thing in trading is being obsessed with the price, constantly checking the price, thinking, it's going to go up, it's going to go down. And that can consume so much of your energy. Whereas there's no point really looking at the short time frame. You need to look over a long time frame. And quality assets over a long time frame only go from one direction, which is the bottom left to the top right, especially as more money is printed.
In terms of starting any position, right, I need to have the brokerage account, as you rightly said.
Yes.
Should I start investing directly myself, or should I get in touch with a broker who can actually assist me with taking positions?
I mean, I would say it's never been easier to open a brokerage account yourself and invest your money. Right. I think that it's absolutely straightforward. There's a lot of things you can watch on YouTube to explain how to invest, and you can do everything from your phone.
Right.
That's with investing. When it comes to trading, I would suggest that you work with somebody who understands leverage and understands markets more than somebody who hasn't really taken trading positions in the past because of that leverage factor and how risky it is.
So can we clarify the difference between investing and trading for our audience?
Sure.
So I think that's very, very important. A lot of people get confused.
It is confusing.
When they talk about stock markets, they think that they're going to lose money straight away, right? They are investing and they are just going to be victims of some crash or something might just go wrong.
There's a negative connotation.
Yes, correct.
Definitely. I mean, investing and trading, there is a gray line. It's not exactly clear because technically, if you're just buying one Apple stock and selling it, you are trading. But generally, trading is with the notion of leverage and investing is with the notion of not leverage. That would be the division that I see personally, but it is a very gray area.
Right. So trading to me, for example, would be that you're looking to buy a stock and you're looking to sell it in the short term. It could be day trading that you mentioned or swing trading, which is in weeks, right?
Yes, which is a longer time
So
period.
you're holding a position temporarily.
Yes.
You're not looking for dividends, right?
No, you would not be looking
in investing,
for dividends.
you're essentially looking for dividends.
Not necessarily because
really? Okay.
some of the tech companies don't pay dividends, but they've appreciated in exorbitant amounts over the past 10 years.
Oh,
So it's just a different way. In trading, like with CFDs, you don't actually own the underlying asset. You're almost speculating the price to go up or speculating the price to go down. Whereas in investing, you're actually buying the asset and holding on to it for more of a long-term period. But again, it's not clear. It's a very gray area of what is investing and what is trading. What you need to understand is that the financial markets in general are one of the most liquid investments that you can get involved in. If you have a property portfolio of $100 million, let's say, you say that the rent is passive. But how many times you have to fix something? How many times you have a tenant who might not be in the property?
Yeah.
How many times you have, in Europe, issues with the tenants, and then you can't make the tenant leave the property. So actually, it's not really passive. There is a lot of work. Whereas technically, you could manage a $100 million portfolio in the financial markets on a computer, one person, technically. So that's kind of like the amount of involvement when it comes to the size of investments can get very different when it comes to property as an asset class and then the financial markets.
So let's say I have saved 10,000 dirhams over the last number of months. I've worked hard and saved that amount of money. How should I go ahead and start investing 10,000 dirhams into the financial markets?
Are you planning on adding to that 10,000 or it's just that 10,000 that you've allocated?
For the time being, that is the money available. Of course, I have the ongoing income and I'm looking to spare a certain amount on a regular basis as well.
The first thing that I say to most people is that don't deploy the 10,000 all at once. I would rather deploy 1,000 dirhams over 10 months instead of just deploying the 10,000 straight away. And the reason for that is obviously financial markets move up and down. So if you're doing what I had explained before, which is dollar cost average, which is buying the same asset at the same time, regardless of the price, then if the market goes down, you buy at a lower price. So it means your entry price overall is lower. And if the market goes up, well, that's what you want. But at least you're kind of de-risking yourself from a time horizon. So you put 1,000 end of January, 1,000 end of February, 1,000 end of March, maybe the asset's going up. Last year in April, the market crashed. So that 1,000 that you put in the April would have allowed you to buy that asset at a high discount. And then May, June, July, the market started to pick up again. So that's my advice, is that you shouldn't deploy all your capital straight at once. You should be methodical about it. And at the end of every month, why do I say at the end of every month? Because that's when you do your admin. That's when you look at your expenses. Like it's just something you do, And for me, that's worked extremely well. But obviously, I'm also into trading. So I do spend a lot of time looking at asset prices and stuff, but it can drive you crazy.
Right.
Because you always think that the price might drop. You might have a crash. But at the end of the day, over a 25-year horizon, like the crashes don't make any significant difference. It's just going one direction.
Right. So you'd mentioned earlier that I should buy S&P 500.
Yes, that's the easiest, simplest thing that you can do.
And how do I decide between different stocks? I mean, that's where the education comes in, right? Like in property, I'm supposed to understand different areas and risk appetite and the potential growth, right? How do I go and educate myself on the S&P 500?
So if you're buying that ETF I told you, it buys automatically exposure to 500 companies. So it would be like buying a property where you get exposure to the whole of Dubai. So you don't need to pick. It's the top 500 best locations in Dubai. You can buy it by just buying one property. It almost doesn't make sense, right? Because in properties, but that's how you have to think of it. And don't forget that it's constantly rebalanced. So it's only the top 500 companies in the US. If a company is not performing, it's taken out, and the most performing company is put in, almost like in football, so Premier League.
Yeah.
Or in cricket.
Right.
So you're constantly investing in the best 500 companies in the US.
So it's a pool that you're investing in, right? So whatever the average in that pool is, you're going to get the result of that, right?
Exactly.
So there's no education required in this case, right?
That's why it's so easy. And majority of the money managers, mutual funds, all these guys who are charging like 3-4% per year AUM and these fees and that fees are basically doing that.
They're charging commission from you.
Exactly, where you could do it yourself.
Right.
Like the easiest thing you can do is just buy an ETF in the S&P 500.
And how have these S&P 500 performed over the last, let's say, 10 years?
The average of 10 to 15% per year.
Right. That's quite significant.
Especially when it compounds. And that's another thing that a lot of people don't understand, which is the compounding of money.
Right.
So if you have
if you can explain this.
Sure. If you have $100 and you make $15, then at the end of the year, it's 115. Then you will make 15% on the 115.
15, correct.
Then 15% on the 115 plus, you know what? And then when the numbers get to a certain size, the compounding is insane.
It is.
I suggest
double in a matter of a few years.
Exactly.
Right?
I suggest anybody to go online and go to a compounding calculator and put in like $100,000, let's say, that compounds over 25%, which is a lot, but just for fun, and see how that looks over a 25-year period, and you'll be astonished, even if you don't add any more money to it.
So essentially, I can just buy that stock with 1,000 dirhams and just go to sleep, right?
Technically, yes.
That easy.
Nothing is.
You're making it sound easy.
It is. I think it's easy. There's no reason why anybody shouldn't buy the S&P 500. Not only exposure, you should have exposure to property, S&P 500, to other asset classes which you like or which appeal to you. But I think it's never been easier, and it doesn't make sense not to do it.
So now, 1,000 dirhams coming back to 1,000 dirhams again. When should I aim to pull it back?
Look, I look at investing on a 25-year horizon. So this is my retirement fund. A lot of people here don't have a retirement fund. They don't have pensions. So it's important that you learn how to invest when you have income in order to protect yourself in the future. And we all know what inflation feels like. Wages have not increased that much compared to how expensive life has become, not only in the UAE, but everywhere in the world. And that's because the governments are able to print more money. And so you have this illusion that the asset is becoming more expensive, but actually no, the money is becoming cheaper.
Yeah.
And this is a lot of people don't get that or don't understand that. And when you do, you realize that if you don't invest and you just hold on to cash, that you're losing a lot of money. From the beginning of this year until now, the US dollar has lost around 10 to 12% of its purchasing power. That's insane, man. If you just sat on $100,000, it still is $100,000 in your bank, fine. But it can only buy around $90,000 worth of goods and services or assets around you.
Absolutely. Now, in terms of the years, you mentioned 25 years. And then why did you say that, I should split it into 10 different buckets, 10,000 dirhams into 10 different buckets? If you can just connect the dots once again for me.
Sure. Because asset prices move, and they can move pretty aggressively depending on what you're investing. So if you were to just invest 10,000 dirhams today, if the market dips next month, you don't have the liquidity to buy at a lower price. And if the market goes down, it's in your favor to buy at a lower price, right? But if the market goes up and you buy at a higher price, overall your strategy is working. Your asset is going up in price. So you're happy. So either way you win. That makes sense.
Right.
If the asset price goes down, you still have the liquidity to buy another 1,000. If the price goes up, well, that's good. Your first 1,000 is worth more, and you're putting another 1,000 to buy at a higher price again, but you don't mind. But if it dips, you have the ability to buy it cheaper, and that's the key thing there.
Basically, you're looking for better opportunity, right? In terms of you should buy stocks when they are down, right? Ideally, then we should wait for a crash, right?
But everybody thinks that there's constantly going to be a crash, and if you missed investing and you just keep holding on to waiting for a crash, you actually end up worse off than if you just consistently invested, like I'm telling you, like systematically. Because even if there's a crash in April, you would have bought it. Then if there's a crash 2 months later, you would have bought it. You know what I mean? So you have to remove the emotion. Even in trading, everybody struggles with emotion. The appeal of trading. So let's move. We have investing understood. Now, what a lot of people want to do is trade. They want to day trade. They want to make money fast. And that's kind of like what a lot of gurus and a lot of people online, which I'm sure you see, sell this dream of being able to make a lot of money really fast. Okay? The risk involved in that and the amount of time you need to sit and stare at a screen is way more than just taking your 10,000 and buying S&P 500. But the returns are potentially much bigger.
Of course, bigger the risk, the return is
so it's what
higher,
appetite do you have for risk?
Yeah. Just going back to the investing part, and I'll come back to the day trading. Now, what happens to my 1,000 dirhams in case there is a crash?
Let's say you have 1,000. It depends. It could go down to 800, let's say. But every single time there's been a crash, the market has recovered at an all-time high, higher than the all-time high before the crash. So
I should just continue to wait.
Yes.
It's a long-term investment.
25 years. That's why I'm saying it's a 25-year game.
Right.
Because when you zoom out, the good assets, quality assets, only go from the bottom left to the top right.
Right.
All the little movements on a monthly basis. That's why if you want to just invest, you shouldn't be looking at the screen. It's the end of the month. You're doing your admin. You invest. Finish. You don't care what the price is. You're not waiting for the right price.
Right. Now, the 10 to 15% return that you've mentioned earlier, that is in the form of a dividend?
No, that's the asset price going up.
Right. Okay.
They do pay dividends, but they're very small.
Okay.
Like the dividends are almost negligible now in a lot of companies in the US, basically.
Right. Okay, let's move to the day trading now. That's where the fun begins, right? I mean,
yes.
Investing 1,000 dirhams over a period of 25 years, you can go to sleep, just continue to invest, it'll give you money.
That's what I would suggest majority of people to do. That's what most people should focus on, having a solid income stream, controlling their costs, not constantly upgrading their life so that they can invest money for their future self. That's what I would say is, for majority of people, that's what they should be doing.
And one more question before we move forward. Now, over the last 25 years, what has been the performance of these stocks that you mentioned?
Again, ETFs is around 10 to 15%. If you invested in the
that is
S&P
over the
500.
last 25 years.
Yes.
Okay, so we have a proven track record
100%.
of ETFs, right?
Yes.
Okay, great. Day trading, right? Who should do day trading?
Day trading appeals to a lot of people because technically, if you can make 1% with $100, let's say you can make 2% with $100, you should technically be able to make 2% with $100,000. And you should technically be able to make 2% with $1 million. It's a percentage game, right? But 2% of 100, 100,000, and $1 million are three very different nominal numbers. And that's why it's so appealing. Because people want to learn how to make money. A lot of people, I think, don't want to necessarily go down the traditional path of going to an office, having a boss, working your way up the corporate ladder. There's more of this idea of having financial freedom, of being able to trade anywhere in the world, be able to control your own destiny, and be able to make money when it's just you versus the markets. And that's what appeals to me in trading. That it's almost you versus the market. There's no one else involved. And that for me is exciting as an entrepreneur. If you can profitably day trade, swing trade, you can profitably make money. I think it's the ultimate form of entrepreneurship. Like you couldn't be more free. You don't have a boss. You don't have someone telling you what to do. You can be anywhere in the world. You just need a laptop and an internet connection. And I think this appeals to a lot of people. Now, the fact is that you need to suffer for 7 years in order to get to a point where you can day trade or swing trade profitably. It's very, very difficult. And one of the key reasons why it's so difficult is coming back to that emotional part. How do you control your emotions when they're just so visceral and it's just you versus the markets? How do you control drawdown? Like when you see $100 and you're in drawdown 10%, it's $10. Maybe that will not affect you, right? But what if it's $10,000? Does that affect you? Maybe you, it doesn't. But when you're at a $1 million account and you're at a 10% drawdown, now things get a little spicy. You know what I mean? And then that's how the emotions play into this game. And a lot of people can't control their emotions. I would say in trading, 80% is emotions, 20% is execution. Similar to like going to the gym. 80% is your diet, 20% is actually showing up and pushing the weight.
Correct. So just taking this forward, now I have 1,000 dirhams. Let's say 10,000 dirhams. Just going back to the same example. So I have 10,000 dirhams. How should I use that amount to go ahead and do day trading?
So if you had 10,000 dirhams, firstly, in day trading, you need to educate yourself how to trade. So there's technical analysis and fundamental analysis. Most traders use something called technical analysis. And that's when you see the screens and they have the lines and they're looking at liquidity gaps and using a lot of these like ICT and different acronyms, which sound very confusing for someone who isn't within the industry or doesn't understand how to trade. And first, you have to educate yourself. Now, when you educate yourself, you can either take a course or you can follow somebody who gives signals. A signal is someone who says, okay, buy this position. This is the stop loss, meaning that if the price of the asset drops to this certain point, then you close the position. So that's kind of like your insurance policy. And then you have a take profit, which is where you assume the price of the asset is going to go for you to make money.
Right. So what kind of education do I need now to start with?
I would say there's a lot of free education on YouTube. I think you would spend a lot of time educating yourself about like the basics of trading, the basics of fundamental analysis, the basics of technical analysis. And then I would find somebody who you think has good signals. And I would start to understand and watch them, usually in a Telegram channel or a Discord channel, and understand how they trade and why they're taking certain positions.
Right. How much time I need to invest on this on a daily basis?
I think if you want to take it seriously, you need to invest like around 2 hours a day.
2 hours a day.
Yeah.
Okay. Right. And what kind of stocks I should look at to start with?
So majority of people day trade either indices. Okay, like the S&P 500 is an index. They trade commodities. A lot of people trade gold because it moves pretty fast and there's a lot of big movements in the day. Because don't forget, you're trying to make money on very small movements in the asset price.
Right.
But again, you're doing it with leverage. So your chance to make a lot and lose a lot is extremely high as well.
Right.
So that is it. A lot of people, they trade indices. They trade currency pairs as well because they're quite predictable currency pairs. And then you also have commodities.
How many people have heart attacks because of this?
A lot of people. A lot of people stress themselves out and get too consumed and can't control their emotions. That's why most people are not meant to day trade. Most people are meant to
invest for the long term.
Let's say you're a lawyer, you have a good salary, manage your salary, manage your life expenses, and invest in your future. That's what most people are meant to do. But the younger generation now are very, very interested in day trading. I can't lie. The demand for day trading, the demand to try and figure out how to make money again anywhere in the world from a computer with an internet connection is just growing and growing. So there is a massive demand for that. But your average person should be just long-term investing.
So where do I need to reach in order to get a leverage on 10,000 dirhams that I have to invest now?
You could open a brokerage account now and get 10 to 1 leverage, 50 to 1, 100 to 1 leverage straight away.
Who decides that I get a leverage and what kind of leverage is available?
By going onto the broker's account
and
signing and KYCing and proving that you have the funds in order to trade, where your funds are coming from and all of that, you have the ability to have that kind of leverage.
So to start with, what kind of leverage I'm looking at?
You
on
could
this
have
amount?
100 to 1 leverage. So if you have
Which is-
if you have 1,000 dirhams, you
Okay.
could take a position of 100,000 dirhams.
Right. What happens that the stock price goes down then?
So
On
if
the
you
same day
went,
basis.
so if you bought, so you went long, they call it,
Mm-hmm.
and the price were to go down, then you need to have a certain amount of money in your account to hold that position in drawdown. Because now it's negative, right?
Mm-hmm.
Let's say we bought at 100 and it goes to 99. Now you're in drawdown 1 dirham. But if you were 100 to 1, you're drawdown 1,000 dirhams.
Right.
Okay. Now, depending on the platform, it will say in order to hold this position, you need to have 11,000 dirhams in your account or 12,000 dirhams in your
Right,
account.
right.
This is when it starts.
Right.
So if it keeps going down in price, then it will ask you to have more margin in the account for you to hold the position. And that's where people get stuck because
Right.
they over leverage.
And you need to have that amount available in your account, right?
Exactly. So either you top up or you close the position.
Right. And there's a chance that you could end up losing the entire money in your account, right?
Definitely. You can be in a margin call situation and you could lose all your money. And that's why we at Trade Hills like to educate our clients on how to use leverage responsibly, you could say. There's no safe way to use leverage. There's no safe way to invest. There's risk in everything. When your financial advisor or the guy calls you and he says, I have a completely zero risk opportunity, you know to hang up the phone straight away because nothing in life has zero risk. But you need to be responsible. People have a risk appetite to use leverage. It exists. But using it responsibly is what's very important. And educating people how to use it, I think, is something that I found to be helpful in my journey as a trader. And I wanted to give that back to the community and give that back to our clients. Because sometimes trading can be really boring. It's sold as this extremely exciting, like fast cars and etc. But actually really good traders, really good investors are great at just sitting and waiting, you know? And that's what is kind of like the balance. So some of our clients will be stuck in a position for an extended period of time. And I can feel that they're like, but that is real trading, real investing. Patience is everything. Waiting for that right moment. Similar in property investing, you need to also have patience, not only to sit on the asset for an extended period of time, but also if you see a location which you think in the next 10 or 15 years will have value, you have to have the patience and the foresight to purchase now and hold on to that asset for an extended period of time. Same thing goes like if there's a property crash. Let's say we have a drawdown of 30% in the property market. If you have no liquidity, you can't take advantage of that.
Correct.
So you always need to also have some cash in the bank.
Now, we've talked about day trading, which is trading within the same day, right? And swing trading is trading
Day, week, month.
right. So, which is still short term, right?
Yes.
What are the other forms of trading?
I think those are the two main forms of trading. You have day trading and swing trading, and then you have investing, which is technically trading. You're buying and selling something in speculation.
Correct.
Right?
But for a longer term.
But it's a much longer term
holding.
period.
Yeah.
So I think that's kind of like what the investment trading table would look like if you were to divide it up.
Right. Where do you personally invest?
Me, S&P 500, NASDAQ, and then I do buy individual stocks as well, depending on whether I believe in their story, I believe in the founders, I think that there's room to grow.
Right.
So one of the stocks that I bought recently, which did very well, is Robinhood, which is a tech investing platform in the US. I've done very well on Google. Google was underpriced, in my opinion, at the beginning of this year. So you had all this AI hype, which is still there. But everyone was saying that Google has lost it. Search is no longer applicable. People will just go on ChatGPT.
Yeah.
But the one thing circling back to what I said to you earlier on in this conversation is when was the last time you used Google? 5 minutes ago, probably.
Correct.
You know.
Yeah.
So they have something called distribution. And when you have distribution, it's very hard to knock someone off if they have access to the customer. So it was only a matter of time that they built out their suite of AI products. And now everybody's using them, you know? But they have access to your Gmail. They have access to your Google Drive. They have so much information that they can easily slip in very, very smart into your life.
It's a complete ecosystem.
Exactly. Similar to Apple.
Yeah.
Again, a lot of people, you know, Apple is done. The new iPhone is not the same.
Yeah.
What phone do you have? Most people have Apple iPhone.
I have Samsung.
Oh, there you go. But you have an iPad.
I have a love affair with Apple in a different way. And the Apple story in itself is very fascinating.
What's beautiful about Apple is that like people who have not so much money and the richest people in the world still use Apple.
Yeah.
You know? And I think that's incredible because there's not a lot of products where, let's say, even your salary per month is an Apple iPhone, yet you'll find a way to buy the Apple iPhone, whether it's for clout, whether it's for the usability, whether it's for all of that. And then a guy who every second makes an Apple iPhone in earnings also wants an Apple iPhone. There's not that many products where you have that kind of intersection between the whole suite of society wanting that one product.
That's true. Now let's personalize this investing and trading. You mentioned your own experience. How much? Let me ask you a direct question now. How much money have you lost over the last 10 years?
I would say I've lost maybe in trading, not in investing,
right? But
in trading, probably like $150,000,
right?
Something like that. Yeah.
And how much have you actually made?
Well, I would say $5. No, I'm joking. I would say around $350,000.
$350,000. Right. And in investing?
Investing, I'm still holding on. Yes. Right. So I invest in property as well. I have multiple properties in the UK. I have property here. I have a portfolio in crypto. I have a portfolio in stocks and shares.
Right.
So I'm pretty diversified in general. And like at the end of the year now, for example, as you're doing your budgeting for your business, I'm budgeting for my investments. Right. So I'll take a look at everything. I'll look at my total net worth, see the percentages which have been allocated, and then see whether I want to adjust that depending on my risk appetite.
What are the hardest lessons that you've learned, as part of your trading/investing activity?
I think the hardest lesson to learn, number one, is that you think that you can time the market, but you can't. Like no matter how smart you think you are, no matter how many people you listen to, you cannot time the market. So you're better off just being in the market for an extended period of time, but always being cautious that you have liquidity to buy if you do need to. But missing out, like there's been months where I'm like, the price is going to drop. Let me wait. 3 months later, the price hasn't dropped. And I'm just like, shit, it keeps going up. And the market can go up way faster than it can go down on an extended period of time. I don't know. Like as a pessimist, you sound smart as a pessimist, but optimists always win in the long run. I don't know how you feel in your journey as running a business and being a lawyer.
I would resonate with that.
It pays to be an optimist.
Yeah.
You're better off being an optimist, because otherwise you're constantly waiting for something bad to happen, but net, society gets better. Human beings find solutions. Technology gets better. So I just think it pays to be an optimist. So I try as much as possible to be an optimist. And to remove your emotions. Like you need to, that's why the dollar cost average thing, it sounds so simple, but actually when you're in it, it just makes everything very calm. At the end of the month, let's say you buy S&P 500, QQQ, and Bitcoin every month. You don't need to think. You don't need to look at the prices. You don't need to read Bloomberg. You don't need to hear, the world is falling apart and this and that. No, you just do it. And if you do that and you buy quality assets, I'm 85 or 95% sure in 25 years, you will have like a nest egg which can look after you when you don't need to work or anything like that.
Right. A lot of people are resident here, of course. I mean, we tend to invest in property as we've talked about earlier. Of course, I mean, we have stock exchanges in the UAE, right? We haven't talked about the DFM, the DIFC, Why don't you invest in those kind of, exchanges or the stocks listed there?
I think there's some amazing opportunities to invest in the UAE Stock Exchange. I don't do it personally because I look at my life and then I calculate the risk. So all my business risk and life risk is in the UAE. Most of my property risk is in the UK. And then most of my stocks risk is in the US. And that's how I look at it. So right now, the UAE is doing phenomenally well. The UK isn't doing very well. So my property prices, let's say in the UK, have not performed as well as my business in the UAE. But things can change. If things change, let's say the UK starts to have a better economy and things start to look better and people start investing there, then my property portfolio there will increase. And then stocks in the US, I mean, it's my opinion that if everything were to fall apart and the stock exchange in the US were to go to zero, like you would have way worse issues to deal with than the price of your portfolio. Like that's a World War III kind of situation, in my opinion.
True.
Also, yes, you have China, you also have India, which are growing in technology. They have growing markets. The domestic market is huge and they're doing phenomenally well. Pakistan's stock exchange has done phenomenally well as well. But the US is an older, more mature financial market. And I think that still the US is a hub of innovation. Yes, it has a lot of competition from other countries, but still some of the best companies which are global come from the US. So by buying into the top 500 companies in the US, I feel secure that like I will consistently perform well over an extended period of time for the time being.
I want to go back to the brokerage account, of course. The reason I want to touch base on this is that, of course, I can manage my own account, right? But a lot of people work with brokers.
Yes.
Right? What are the things that I need to keep in mind while looking to work with a brokerage house?
I think the things you need to keep in mind is obviously the track record of that broker. Like what are kind of the advice that he's given his clients and how has that performed over time? Everybody in general, when they're selling you, will show you only the plus side. But people who are honest also show the negatives, the mistakes that they made. And I think being open and transparent is very important. And that's how you build trust, right? Like, yes, you're always positive and you're always saying, yes, this did well, I saw this. And most people will say, see, I told you this was going to go up in price and it did. But you forgot the tweet which said it was going to go up in price and it's not highlighted. So I think getting people to trust you by being authentic and finding brokers who are authentic or finding people who are experts in their field but authentic is extremely important.
What kind of stocks these brokers usually invest in?
It completely depends on the client's risk appetite. I mean, a lot of banks have wealth management. So most people go to banks for their like buying bonds, corporate bonds, or buying government bonds and things like that. If you yourself want to invest, then I think the best platform is capital.com. And that's a brokerage platform which is regulated worldwide. And there you can buy absolutely everything from crypto to stocks, to indices, to currency pairs. And you can trade them on 1-to-1 leverage. So that's, as we said, no leverage. Or you can also trade them on 100-to-1 leverage as well.
You just mentioned bonds. How do they perform?
Bonds depend. Corporate bonds, for example, you could have anywhere from 5 to 15%. I've never bought a corporate bond personally, but I think it matches a lot of people. A lot of people like fixed income. And then obviously government debt, such as treasury notes and things like that in the US. It depends on the time horizon. So have 3 years, 5 years, 10 years, 15 years. I think they were also talking about a 50-year one as well, but I don't do fixed income very much.
Right. A lot of banks approach us, of course, I mean, the clients here in the UAE to invest in bonds. Usually they are safe, right? They're
Of
kind
course.
of guaranteed sort of...
Nothing's
income.
guaranteed.
Yeah. Okay, well, that's quite interesting. Usually, I mean, they say that there are terms and conditions, of course, that you wouldn't lose money. You'll actually get your capital back with a certain fixed income attached to that. Why do you say nothing is guaranteed here?
That's just in my opinion, I don't think anything is guaranteed. Right. Nothing is guaranteed. There's always risk. There always has to be risk in every investment.
Right.
Even if it's a company which is backed by the government, you still say, okay, this government is liquid. For sure, this company is doing very well. Yeah. And that's the premium you get paid, right? The more risk you take, the more money it is.
Yeah.
And that's always with like everything you invest in or every asset class.
Right. Well, maybe the sort of risk is not that high.
For sure. It could be less risk, but very difficult for anything to be guaranteed.
Right.
Yeah.
Now we're sitting almost touching 2026. Is the crash coming in 2026?
Look, again, you play on your mind where you think that assets are overpriced because you've been tracking the price of an asset and it's been going up. If there's a crash coming, then you should have the liquidity in order to be able to buy the crash. But I don't think it's wise to keep yourself outside of the market for too long. And that's why we come back to dollar cost averaging. That's why we come back to investing in the S&P 500, which is, in my opinion, one of the lowest risk investment decisions that you can make. It's very liquid. You can buy and sell anytime you want. And it's has a track record which has shown that it's gone up by 10 to 15% for as long as you can go back.
Mm-hmm. So the order of the day is to actually invest for the long term in S&P.
Yes.
And then you should go to day trading if you can educate yourself and you have that risk appetite.
And you have the time also. You have to have the risk appetite. You need to have the time. And it needs to be something that interests you. You know, but for most people, they're focused on their job. They're doing very well in their job. And they should just focus on that and invest long term.
So what is the role of AI at the moment in investing in stocks?
So, I mean, there's a lot of people who are talking online about how AI can be a better stock picker than a human. And there's obviously people who are using algorithms to trade. I personally have experimented with algorithms, but the algorithm mimics a human being's stock picking decisions or price, like buy and sell signals. I think that it's something which people should be aware of. I think it's something interesting, but there's also been a lot of times where the AI has not performed better than a human being. So I think it's a bit of a gray area at the moment. It's definitely something that any business owner should be looking at. How can they implement AI into their business? But I don't think it's reached the point yet where it's guaranteed.
I mean, I wonder how would AI predict the future? I mean, it's going to be very tough, I guess. I mean, in terms of predicting what is going to happen in the financial markets.
So when you look at like technical analysis, so let's say there's support levels, resistant levels, amounts of volume, how different asset classes correlate with each other. Technically, all that data is being ingested by a human, and a human is making a prediction. Technically, all those data points could go into a computer, AI, and it could make a prediction. But there's other elements which come into play when there is investing and you are trading, like the human element and the emotional element, which come in, which I think that the AI can't really replicate and it can't predict. Because sometimes the market moves irrationally, you know, and you can't explain it. But for an AI algorithm, like irrationality doesn't exist. It doesn't understand, whereas a human understands what irrationality is. So I think it's still early stages for you to completely rely on an AI to do all your investing.
Rationality and irrationality. Just going back to the emotional part, I mean, you'd mentioned that 80% is emotions and 20% is?
Execution. Technical analysis.
Exactly. Do you want to explain the emotional part here when you say 80% is emotions?
So when you go into drawdown, you tend to hold it longer than you would like because you have a hope that it will go up, right? But when you're in profit, you tend to close faster because you finally have the profit, so you want to take the money. And being able to control that is where your emotions come into play. And you have a moment where you'll have a trade and you are in drawdown and you hold it way longer than you should. So then your losses are huge. But then when you go in profit, you take it fast. So your profits are smaller than your losses, where it needs to be the other way around. You should keep your losses small and your profits large. But that playing with your mind and your emotions and how you feel, that's why a lot of people journal. You should journal how you felt and the trades which you took. That's where the emotion plays in. And then you have FOMO, like someone telling you, oh, I bought this. And you're like, oh God, why didn't I do that? You know, and it plays on your mind to an extent which when it's just you and the markets, it's very difficult to control. The only way to do that in investing is dollar cost average, because again, you don't care about the price. You're just buying the asset that you believe in. But in trading, every trade should be in its own box. So you have your thesis, you have your stop loss, you have your take profit, and you let the trade run. You don't interfere. If it hits your take profit, great. If it hits your stop loss, that's it. And once that trade is over, it should be completely eliminated from the next decision that you make. So you could be in a situation where you take a trade, you get stopped out, and you take the same trade again. It should not affect you. But most people, obviously, if you lose money, not going to go into the same trade again and lose. You think straight away that you're going to make money again. Sorry, you're going to lose money again. So it's very interesting how you learn to control your emotions and you learn to be a little more emotionless, to be honest, because you need to be objective. You need to be just looking at the percentages, not the feeling of what's going on in the market. It's just numbers on a screen.
I guess a lot of newbies would get stuck with this,
It's very hard. It's very difficult. It's very, very difficult. It's underestimated and undersold how difficult it is, to be honest.
By the way, the same applies in property investments as well. They say you de-link your emotions.
Yeah.
A lot of people get emotional about property purchases.
Yeah.
But when it comes to the investments, you have to de-link the emotions. You need to look at the numbers and
that's why it's literally you need to be emotionless and look at percentages.
Yeah.
But it's abnormal. Like if you say, Alex, how much was that T-shirt? I won't say, 2% of my salary. I'll tell you it's $20. You got what I mean?
Yeah.
So we're not used to thinking in percentages. We're used to be thinking in nominal numbers. But that's when you come back to the appeal of trading is that technically if you can make 2% with 100, you should technically be able to make 2% with 1 million. You're just changing the size of your positions. But from here to here is like night and day because of the drawdown. Can you stomach seeing that negative number in front of you or not?
And that's the key.
Yeah.
That is the absolute key.
Yeah.
Fantastic. Any message that you'd like to leave for our audience who are looking to start investing?
I think it's never been easier to start investing. We have access everywhere to brokerages. I think there's a lot of information online. And I think more than ever now, we haven't experienced inflation this bad ever in our lives coming out of COVID. And more governments are in debt. And the only way for them to get out of debt is to print more money. So if you don't figure out how to make your money work for you, then I think you're going to be left behind and you will regret it. But you need to be responsible, do your own research, do your own due diligence. Don't just listen to anyone and look for someone who you can really trust to guide you on that journey.
Great. Thank you so much, Alex, for being with me today. I think I've educated myself enough now. I should be looking to start.
Let me know.
Investing.
It would be my pleasure to help you.
Fantastic. Have a wonderful day. Thank you so much.
Thank you.
Thank you.